stepping into, a hospital or healthcare setting?
It's an excellent question, and I think it really comes down to the sites of service. So the degree to which a hospital can segregate the sites of service for COVID patients and non, or even within a system, designate sites as COVID sites and non. If you or I were going in for an elective procedure, like a laparoscopy or an endoscopy, and we knew it were to be outpatient, and it was at a site that is a designated non-COVID site, well, we'd probably feel okay. But it's our ability to manage COVID and make sure that that's being managed properly and swiftly and excellently, and then we can start bringing in healthy patients again for routine procedures.
I do wonder, and I don't know, Jason, if you think about this. I think about this when, taking my daughter to see her pediatrician when she was younger, and there was the healthy area and the non-healthy.
Right.
Or not, where people were fighting things.
Sick kids, well kids.
Sick kids, right? And so I do wonder if it's just going to be that on steroids going forward when it comes to the healthcare community to make everybody feel comfortable about the environment.
I think there's that approach for patients for sure, and then there's a whole other consideration set, which is the healthcare worker. And the degree to which we can get antibody testing in a broad way for all Americans will change all of our feelings about, quote unquote, returning to normal. But the degree to which we can have our employees and our frontline healthcare workers antibody tests so we can all walk around with a COVID card. If you knew you had the antibodies as a healthcare provider or a patient, you would be less trepidatious about going back in.
Alyssa, I do wonder, especially given your background, which is fascinating, and unfortunately we don't have time to get through all of it, but, you were the CEO of Bottle Notes, you're a lecturer at Stanford and at the Booth School. You understand both the philosophy and practice of business. You also, I believe, have done some work with the Illinois Housing Authority. So, and Illinois is a place, and we interviewed the mayor of Chicago recently and just talked about the haves and the have-nots when it comes to this virus, and so much that's been exposed here. You're seeing this through all aspects of your work. What has it taught us? What can we do in the short and the midterm to maybe mitigate some of the really hard facts that we're learning here about who gets what when?
I think that your point is the right one, which is there's a short-term crisis to manage and there's a medium-term desired outcome to plan for. And Mayor Lightfoot's an extraordinary leader and a friend. And we all need to make sure that access to preventative care and access to well care for all of our children across Chicago, of course, Illinois, and the country is addressed on the backside of COVID. As it relates to what's being done right now in my backyard, as I'm sure you've seen, a lot of pop-up hospitals here and in other major metropolises are what we have to do to make sure there's adequate care for all of our impacted citizens, because when you don't have social distancing is hard.
Yeah.
It's just not that easy, and it requires a level of independence and oversight and physical space to do it.
Right.
And that is not evenly distributed amongst our population. So that's going to take a medium-term solve.
Well, and social distancing essentially is much easier for people of means. I think that's just a fact, right?
It unfortunately, social distancing is easier when you have space and you can access digital e-learning through digital technologies, and you have space to do your work from home, and you don't have to be somewhere to do it. And those are all, by definition, things that are related to socioeconomics. Yes.
Just got about 30 seconds. Earlier, the New York City mayor said that they're going to create their own strategic reserve, and it's all about, I feel like we're federal versus states right now. Is that what we're going to see states having to do at this point?
I would like to think we will not have to go there. I'd like to think we can be a coordinated, unified team, federally and statewide. But it's, I think that what we're seeing today is that the decision of whether to reopen or not is going to ultimately be relegated to the governors, and then what's going to be done will not be done across the country, and how that will ripple effect and will there be a resurgence in the fall, time will tell.
Alyssa, come back, because we would love to talk some more with you. As Jason said, your background is just so impressive and just crosses so many different areas. So hopefully we can get you back soon. Alyssa Rapp, CEO of Surgical Solutions, on the phone from Illinois. You are listening to Bloomberg Business Week.
This is a Bloomberg Money Minute. It's another down day on Wall Street as turmoil in the oil market spills over into stocks. The Dow Jones Industrial Average is down 518, the S&P 500 down 71, the Nasdaq Composite down 222. President Trump says he supports a bill that would replenish a small business aid program that ran out of money last week. The measure could win Senate approval today. It would also provide money for hospitals and coronavirus testing. Synchrony Financial, which provides store credit cards to JCPenney, Gap, and others, says spending fell 26% in late March after rising for much of the first quarter. It sees even bigger declines in the second quarter. The pandemic is weighing on the bottom line at Coca-Cola. It says volume is down 25% this month, with sales outside the home especially hard hit. Some places saw higher grocery sales as lockdowns began, but they've returned to normal. Larry Kofsky, Bloomberg Radio.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work. But only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home, protect the NHS, save lives.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
The Right Time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the managing. You remember he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. You know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search The Right Time with Bomani Jones to listen.
America, your children have an amazing superpower. They can help save lives by not having play dates. That's right. By replacing get-togethers with virtual play dates and video chats, they can help slow the evil spread of germs. And if your superheroes do go outside, make sure they continue their superhero wing by staying 6 feet away from others to protect everyone in America land. Find out more at coronavirus.gov. A message from the CDC and the Ad Council.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Gotta say, Jason Kelly, it was sunny for like maybe half a second, and now it's gray and gloomy, and I feel like that is a great way to describe right now the energy market and the oil market specifically.
Absolutely, yeah. I think both of us had to turn on our desk lamps just now.
It did.
It got really dark, and it is pouring rain now. All right, we're going to catch up with Stuart Glickman in just a few minutes over at CFRA to talk about that crash in the oil market. In the meantime, I know that's something Charlie Pellet's been tracking. He's got that and the rest of the day's business headlines. Hey, Charlie.
Well, hello there, indeed. You look at the screens on the Bloomberg, you almost just can't believe the numbers. Got to begin with the oil story, major story. We got it covered here at Bloomberg. Oil's meltdown spreading to the June contract as the price plummets to less than $10 a barrel. That's where it was right now. Fast-moving energy markets. Latest quote right now on the June contract, West Texas Intermediate, $11.18 a barrel, looking like a drop there of 45%. Equity markets lower across the board here with the S&P down 68, a drop there of 2.4%. The Dow down 491, lower by 2.1%. NASDAQ down 208, a drop there of 2.4%. Equity investors, though, shrugging off signs that Congress is close to a fresh spending bill to combat the impact of the coronavirus pandemic. But what about the emotional and mental health of doctors, nurses, first responders, and everybody else working around the clock on the front lines, taking care of patients? Michelle Patch is an assistant professor of nursing at Johns Hopkins University.
It's okay to not be okay right now. Continue to reach out to others from a safe distance. Take advantage of our electronic devices to connect, and really watch out for our friends, our families. Look to spiritual advisors, therapists, and it's okay to breathe. It's okay to cry, and to keep moving forward.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. The oil meltdown accelerating today, as I mentioned. Worth checking, West Texas Intermediate crude, $11.22 a barrel on the June contract. Among some of the oil majors, ExxonMobil down 0.5%, Chevron down 1.8%, ConocoPhillips down by 3.8%. Indeed, fast-moving markets. Stay with Bloomberg for the latest. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you just heard Charlie run through the numbers, and they are stark and a little bit scary. And certainly we throw around the word unprecedented a lot these days, Carol. But what's happening in the oil patch certainly is that. Let's get into it with Stuart Glickman, head of energy research over at CFRA Research, joining us on the phone from New Jersey. Stuart, great to have you with Carol and myself. I know it's an incredibly busy time. I guess to start, let's just briefly take 30 seconds. Remind people what we're seeing and why it matters so much.
Thanks for having me, Jason. So what we're seeing is unprecedented because we've never had the contract for West Texas Intermediate, WTI, which is the U.S. benchmark. We've never had that contract go negative before. It seems kind of indecipherable at first glance why that price might be negative. And what it really reflects is a fairly thinly traded contract that was getting close to expiration, and a handful of speculators got burned on it. I think a better indication of where things are in the oil markets is probably the next contract, the June contract, which is also down considerably over the last couple of days, too.
Well, that's what I wanted to go to, Stu, is that it's not right. Okay, we get kind of, I guess, what happened with the most recent, the contract that's expiring. But even, the forward-looking contract is under a lot of pressure. Tell us what that is. Is it the supply story? Is it the lack of demand story? Is it both? What is we know this sector's been under pressure. What's the big story here?
Yeah, Carol, it's really both. So what you have on the one hand is you have a plummeting demand. So demand that is normally in a steady state around 100 million barrels a day has dropped perhaps by a third in a very short period of time. You still have a lot of supply making its way to, not just the U.S. market, but other markets as well. But you have so much supply, and if you're a producer and you don't like the price that you're going to get at the pump, from your refiner, normally you just throw it into storage, which is a viable option so long as you have available storage. And I think what the market is telling us is that we're getting very worried about hitting an upper limit on storage. And that's why prices are reacting in the way they are today.
So what does this mean for a typical investor who's looking at this? An investor, maybe a small investor who's also a consumer, because, I get all sorts of tweets and texts from people saying like, well, I guess it's going to be cheap. Not that anybody's going anywhere. But what does it actually, play this through the economy beyond the folks who do this for a living and sort of trade these futures for a living? What does it mean to the everyday person for the next 3-6 months, especially amid this pandemic?
Yeah, so the U.S. economy is now a net exporting nation.
Right.
U.S. production, through lots of innovation by small companies, has really built out its production potential. And so, yes, at the pump, if you happen to need to drive somewhere, you can fill up for cheap. The problem is that the pandemic is disrupting the natural mechanism which would normally stimulate more demand, right?
Right.
And in the meantime, if you are tied to the production of crude oil, and there's a handful of states where it's a really meaningful piece of overall economic activity. You've got Oklahoma, New Mexico, Texas, Louisiana, North Dakota, all that have all benefited from the surge in oil production in the last 10 years, but really now are kind of taking it in the teeth because there's just way too much supply and not enough demand.
So what does this mean globally? I just think about Saudi Arabia. I just think this is what I want, the bigger picture, Stu. What does this mean? We know they've been struggling as we've seen oil prices go down. This is such a big part of their economy. But what's the bigger story here?
The bigger story is that everyone across the board is struggling, and there is really no place to hide. So think back about a month. 6 weeks ago, March 6th, Russia and Saudi Arabia walked away from the bargaining table because they could not agree over 1.5 million barrels of production cuts.
Yeah.
A month later, because of this crisis, they agreed to cut effectively 10 million barrels off the world market, which is historically massive and yet still completely insufficient.
Right.
And what that tells you is that demand has really just fallen off the table.
Yeah, it's really, it's just remarkable when you look at it. I really appreciate that perspective. Thank you so much. I feel like this is a story that I want to be able to walk out of a conversation like that. And I do feel a lot more informed, and I think people need to understand it, not just from the perspective of whoa, those are big numbers, but more how this plays out, as you rightly pointed out, Carol, globally, because Saudi obviously has geopolitical implications as well. We know that to be true.
Well, and I think, Jason, it was happening anyway, but it's been exacerbated because of this crisis, and demand has just come to a stop. So
yeah, for sure. Stuart Glickman is the head of energy research over at CFRA Research, joining us on the phone from New Jersey. Smart guy. For sure. Really appreciate that.
All right, you're listening to Bloomberg Business Week. Carol Master along with Jason Kelly. Coming up, we've got a great story. It's in the magazine this week. It's on the terminal, but about the data the economy and the U.S. needs to get through this crisis. Our Sean Donnan. Love talking with him.
Love me some Sean Donnan. In the meantime, let's get to Bob Moon. He's got your world national headlines. Hey, Bob.
Jason, thank you. Congress has reached a tentative agreement with President Trump on a nearly $500 billion coronavirus relief bill. The measure would replenish a small business rescue program, provide hospitals with another $75 billion, and implement a nationwide virus testing program to facilitate reopening the economy. Society's recovery from the virus pandemic could place Americans in situations they're not used to, but are commonplace in Asian countries that have successfully battled contagions. Bloomberg's Martin DeCaro reports.
Your phone rings, or maybe you get a text message. You must go into quarantine. State-level health departments are expecting to use these minimally intrusive techniques.
The kind of strong arm techniques elsewhere, that won't work.
That won't work in Maryland. It won't work in America.
Fran Phillips is Maryland's number 2 public health official. Her state's hiring 1,000 contact tracers to notify people when they must quarantine, and so far they're cooperating.
We have had very rare instances where we needed to actually place someone legally under an isolation or a quarantine order.
It's unclear if Americans will be okay with having their smartphones turned into COVID-19 tracking machines. In Washington, Martin DeCaro, Bloomberg Radio.
Every large event in New York in May and June has been canceled, but Mayor Bill de Blasio says there will be a time when people can gather in large numbers again.
We will have a ticker tape parade down the Canyon of Heroes for our healthcare workers and our first responders.
Spain, meantime, called off the running of the polls in July. The U.S. has scrapped the national spelling bee in June. I'm Bob Moon.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Message and data rates may apply. T&C and privacy terms can be found at bevel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
There are two sides to every story. From the epic tales of love and loss comes the huge new steady rolling single. When the Judgment Comes, the Elise Rich remix. Download When the Judgment Comes, the Elise Rich remix, or stream wherever good music lives.
Right now at the Halifax, wherever we're working from,
we're all working together to be there for you.
So our customers can apply for a payment holiday on mortgages, loans or credit cards.
And because we want you to stay home and stay safe,
we've created step-by-step guides to help you set up online and mobile banking,
which is safer and easier than you may think.
But for those that really need to see us in person, we're keeping as many branches open as possible.
So however you need us at the Halifax,
we're here to help. Terms and conditions apply. For more information, go to halifax.co.uk.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Be part of the sports conversation with Sports Talk Radio on TuneIn. Join the discussion around your favorite local teams with sports stations broadcasting in your area.
The game will be 185 to 183 and somebody wins, whatever. Football, it's either full go or it's not. You got it's thud. I can practice what they call
Follow
thud.
national storylines and debates with ESPN Radio.
Does the NBA have a hiring problem when it comes to front office jobs in the leagues and a minority hiring issue? Stephen A. chimed in on that today on First Take.
It also resonates with me. Max, you can appreciate this position. One of the candidates was Brian Colangelo. We know what happened. I like Brian, but we know.
And hear what's happening worldwide with international channels like Talk Sport.
Seems as I'm sort of doing my life in reverse at the moment. I was on cricket tours when I was 20 years old, and now I'm 31. I'm sat at home injured playing PlayStation. So it's a tournament basically where you create your own character.
In your backyard and around the globe. Keep your finger on the pulse of the sports world with TuneIn. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
on the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
If you've used TuneIn much, you probably already know how to favorite your top stations and podcasts for quick access. But did you know you can organize your favorites too? Under your favorites page on the TuneIn app, hold and drag the stations to rearrange the order to your liking. It's that easy.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story out of Pretoria, South Africa's Cyril Ramaphosa reporting a 500 billion rand virus support package. And also within the hour, Mexico's central bank delivering a second emergency interest rate cut amid a looming recession caused by the coronavirus outbreak and a plunge in oil prices. Banco de Mexico reducing the benchmark rate by 50 basis points to 6%. Today's meeting, by the way, unscheduled. The Dow, the S&P, and NASDAQ all declining right now. Let's begin, though, with crude oil, West Texas Intermediate. Under $12 a barrel right now, talking about the June contract after yesterday's plunge below zero, $11.90 for a barrel of WTI, again stressing that is the June contract. The S&P down 81, drop there of 2.9%. The Dow down 591, drop of 2.5%. NASDAQ down 259, a drop there of 3%. We've got the 10-year up 11.30 seconds. The yield this Tuesday, 0.57%. Gold lower by 1%, 16.79 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, there are two things we love on this show. One, data. We love numbers. Totally. We love being able to explain things. It's our training at Bloomberg. We're very much in the midst of that, all the way up to our founder. The other thing we love on this show, Sean Donnan. Just can't get enough of that guy. Senior trade reporter for Bloomberg, joining us on the phone from Washington, D.C., as is, of course, the man himself, Joel Weber, editor of Bloomberg Business Week.
Can I just say, the skies just opened up, and I don't know whether that's Sean and Joel's power. I don't know as you introduced them, but literally thunder and lightning just went crazy.
Yeah. Exactly.
Outside my window here.
All right, so Joel Weber, I think you agree with me. We love data. We love to be able to prove things. I think about the Bloomberg 50 and the fact that it's got to have a number around it. This story is all about numbers.
All about numbers, and I think this was one that really started with Sean. As I get to some thunder in my background as well, really sets the table for talking about data, right?
Totally.
But the numbers are failing this time. Why is that, Sean?
Well, you look out there and we look at this great big economy that we've got, and you're trying to reach for some data to show you what's happening in there. And the reality is, you look at the normal economic data that we rely on, the non-farm payrolls, the inflation data, all of that stuff, and it's just not telling us what we need to know right now because this thing's just moving too fast. And that tells us something bigger. Here we have, ostensibly the biggest economic crisis of our lifetime, and yet the data we rely on to measure the economy isn't keeping up.
Well,
it's time for something new.
I love this line in your story. Peering into our future might be easier if we knew with certainty what happened in our immediate past.
Yeah.
I mean, to get an idea, this is what Jason and I talk about so much, and I'm assuming, Joel and your team, it's like, what does life look like post-COVID-19? But unless we can kind of trust the data that we're dealing with now, we really don't know, right, Sean?
And we don't have the data yet on our immediate past, a lot of our immediate past. That first quarter GDP, those 3 months to March, the first reading we're going to get of that is April 29th. The data, the one that we really care about, that the second quarter that we're in now, where most economists agree the big downturn is happening, we're not going to get that until the end of July.
All right, so this is such a great read in part because there are some history lessons in here, some callbacks, the McNamara fallacy. Tell us about that, Sean.
Right, so there was this grim bit of data that the American military operated and really planned the war around in Vietnam for years, and that was body count. Literally, from the ground on up, they were reporting the number of enemy combatants killed on a daily basis. And commanders back in Washington were using that to assess how the war was going. The problem is that you got some really perverse incentives in the system there where commanders on the ground whose careers depended on this data were inflating the data and reporting that back up all the way to Robert McNamara, who was then leading the war effort in the Kennedy administration. And he was looking at these daily body counts thinking the war was going great for years, that the U.S. was winning, when in fact it was losing quite heavily on the ground. The McNamara fallacy is what came out of that, and that is what happens when policymakers in particular, but it could be investors, quants, it can be politicians, business leaders, CEOs, when they have their nose in the data and they ignore what is going on in the world around them. And that leads to just some really bad choices and some big mistakes. And so that's the downside of data. Right now, we don't have the data we need. At the same time, we can all look out into the world and know that things are not going well.
So do we need to think Oh, go ahead, Joel, please.
Well, I was just going to say, we're not totally driving blind here in that there are places that, the Federal Reserve and the GDP Now Index, Sean, is one way that we have attempted, that economics has attempted to kind of put its pulse on the now. But even that has its limitations, right?
Right. So what we're starting to do now, and you're seeing it in a lot of the alternative pieces of data that we're all looking at. People were looking at open table bookings there for a while at the beginning of this crisis. Just that collapse in reservations through that booking app, reservations at restaurants that happened in cities as the shutdown orders went through. We've been looking at TSA security clearance data to show the number of air travelers. We're looking at traffic data, electricity usage data, all of that stuff. But all of that is kind of partial. It's not necessarily reliable. And while the Federal Reserve and a number of the regional feds have put together these efforts to try and measure short-term GDP, and the Atlanta Fed does this, the New York Fed has played with this, the Philly Fed has played with it as well, none of those things are really reliable enough to count on yet. So we need that data. We're looking for that high-frequency data, but we don't yet have that magic data that we need.
What makes me nervous is not having that magic data is that here we have policymakers trying to figure out what's the right steps to take. We're going to be talking with Paul Krugman and get his take on this a little bit later on our broadcast. But I do wonder, Sean, if we don't have that magic data, might we be taking the wrong policy steps right now that will hurt us later on?
That's absolutely the risk. We really don't yet know where the damage is in this economy, the U.S. economy right now, and that means you can't necessarily target the policy response to the right areas. And that's something that we're going to be adjusting, or that policymakers are going to be adjusting and dealing with a lot in the months to come.
Well, and it's interesting too, Sean, you talk about China in your story, which, normally I feel like in normal times, whatever that used to be, we would look at Chinese GDP data and things like that. Be like, well, you can't really trust them, but we have these other ways to do it. Unfortunately now, literally life and death decisions are being made based on data that we have from China, which we now know probably isn't reliable. And global leaders, central bankers, presidents, heads of state, they're making decisions on that data. How worried should we be about China here?
Well, yeah, China has always been a question in terms of its data. There's also clearly now there are some big questions over how they covered up the data early on, in particular in whether they are continuing to cover up the health data. But we also know that Chinese leaders have for years had their own ways of adapting to bad data. And Li Keqiang, who's the premier right now, famously about a decade ago sat down for dinner with the then Chinese ambassador when he was a provincial leader, and he said, look, I don't trust our own GDP numbers. So I look at three things. I look at freight movements, I look at bank loans, I look at electricity usage, and that tells me what's happening in the Chinese economy. Amazing. You know what? We're all kind of Li Keqiang right now.
We're all becoming or hedge fund people, right? Hedge fund investors looking at, different metrics. Sean Donnan, we do love you and adore you. Everybody, it's in the magazine, online, it's a must read. Sean Donnan of Bloomberg News, and our thanks to Jill Weber, who we also adore at Bloomberg Business Week.
There are two sides to every story. From the epic tales of love and loss comes the huge new steady rolling single. When the Judgment Comes, the Elise Rich remix. Download When the Judgment Comes, the Elise Rich remix, or stream wherever good music lives.
When the judgment comes. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
I'm Mel Kiper Jr., and to get you ready for the NFL Draft, you can listen to my podcast, First Draft, as Todd McShay, Chris Sproul, and I highlight all the top picks and give you the analysis you need leading up to the draft. Just search ESPN Radio today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, April 21st. We've got the Dow, the S&P, and NASDAQ all lower. Stocks tumbling the most in almost 3 weeks. Treasury bonds rallying as the turmoil in crude oil futures triggers a fresh bout of risk aversion. Got to begin with crude. Looking at the June contract on West Texas Intermediate crude, down 42%, $11.74 a barrel. This after WTI futures went negative yesterday. S&P 500 index have been down as much as 3.4%, lower now by 79, down 2.8%. The Dow down 557, down 2.3%. NASDAQ down 263. For NASDAQ, that is a drop of 3.1%. But the historic rout in crude rattling markets for a second day. Again, the June contract plunging by more than 50% right now. That June contract down by 41%. Well, after the bell, we will be hearing from streaming giant Netflix. Investors are expecting subscription growth from stay-at-home entertainment seekers. Michael Pachter is a research analyst at Wedbush Securities. He's got an underperform rating on the stock, along with a $194 price target.
Oh, I think they're going to crush the numbers, the subscriber numbers, and the revenues will be fine. And I think the silver lining for them is that they're spending a lot less on content because they can't produce content. So cash flow should improve as well.
Netflix shares right now at $439.54. They are up today by 0.5%. This on a day when the rest of the market is declining. And, of course, we'll be all over those Netflix numbers as they break shortly after 4 o'clock Wall Street time. Coca-Cola says the impact of the COVID-19 pandemic has made it impossible to predict what 2020 holds, although it does warn that the effect on the second quarter will be material. After all, if you're not going to concerts or events, you're not drinking Coca-Cola products. Shares down now by 3.1%. Recapping, S&P down 79 points, a drop there of 2.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you, Charlie, so much. Let's head out to California now. Governor Gavin Newsom giving an update.
Of volunteers to express themselves day in and day out as only Californians can, not only to meet this moment, but to prepare to meet subsequent moments, to organize a volunteer corps in a way that is much more deliberative than we have in the past. There is so much inside of us in terms of our capacity to give and to serve, not just sacrifice in this moment, to do a little bit more to perhaps deliver a meal, do a little bit more to reach out to late neighbors or loved ones, to check in on seniors, to help disabled individuals with groceries or other essential needs, to provide hygiene kits, not just to donate blood, though to donate blood, to participate and volunteer at the food bank, which, by the way, has lost roughly 70% of its volunteers since the beginning of this pandemic. We're trying to organize this site in a way that's more robust, more interactive, and do so in a way where we can maintain a two-way conversation. Rather than you initiating your interest in participating and volunteering, we want to make sure we stay engaged with you. Regardless of your time of life, it's all about a state of mind. From our Zoomers to our Boomers, regardless of your age or stage in life, we want you to volunteer, we want you to participate, and we want to match those efforts in a way that gives meaning and purpose to this endeavor. I love to say this because it's always true. The happiest people I know are the people that volunteer. And I've long believed that no one stands taller than when he or she bends down on one knee to help lift other people up. So this is a spirit of communitarianism, individuals contributing to their community. It's the spirit of recognition that we're all in this together. It's the spirit that has allowed California to bend the curve, because it's a spirit that demonstrably is at scale in the state of California, with tens of millions of Californians that are practicing physical distancing, that regardless of their political stripe, where they are geographically, overwhelmingly are staying at home and have allowed us the opportunity to be at this point in time where just tomorrow we'll start laying out some more prescriptive guidelines and update you on the next phase as it relates to iterations in terms of our capacity to begin to loosen up our stay-at-home orders in a very phased and appropriate way. But as we walked into this together, we want to begin to walk out of this together as well, meeting this moment with that same spirit, that generosity of spirit. And we have just the right person to lead that endeavor. Our Chief Service Officer in the state of California, former lieutenant in the Navy, former council member and mayor, and someone I've gotten to know and admire the course of many, many years, who leads our volunteer efforts in the state of California and will lead this new initiative, Californians.ca.gov, Californiansforall.ca.gov initiative through this pandemic and into the future. Josh, Friday.
All right, you've been listening to California Governor Gavin Newsom. Let's head on over to the New Jersey Governor, Phil Murphy, giving an update on the virus situation in New Jersey.
As well as some other teammates. Again, apologies for being later today. We had previewed this, that we're getting started much later than usual. And by the way, we will as well tomorrow. I believe, again, we're going to be at 3 p.m. Mahen tomorrow here for similar reasons I'll get to in a moment. The reason today is earlier, Judy and Pat and I and many others did a tour of our third field medical station. There are some pictures, which has been set up with 258, I heard, beds in the Atlantic City Convention Center. We're bringing this station up just as we are beginning to see more hospitalizations migrate in the state toward the central and southern regions, and Judy will get into that a little bit more in her remarks. We had predicted that the spread of the virus would move from north to central to south, and have prepared and built out capacity to, God willing, stay one step ahead of that. We were joined by many, and we kept our distance, but I want to give a particular shout out to Major General Jeff Milhorn and Lieutenant Colonel David Park of the U.S. Army Corps of Engineers. They have been extraordinary. U.S. Army Major General John F. King, Adjutant General Brigadier General in our National Guard Jamal Beal, Mayor Marty Small, Casino Reinvestment Development Authority Executive Director Matt Doherty, and as Judy has noted, we migrated very early on under her leadership to a regional strategy. So importantly, we were joined both by Kevin O'Dowd, who is the CEO of Cooper University Healthcare, who is the Southern Region Coordinator and is doing an extraordinary job, as well as by Lori Herndon, who was the CEO of Atlantic Care, among others. It is really amazing to see a space like the Atlantic City Convention Center turned into a field medical station, and I thank the hard work of the women and men of the Army Corps in partnership with our team, the troopers, Department of Health, and many others, our federal partners, our brothers and sisters in labor for making all of this possible. As with each of our field medical stations, these are much needed spaces to ensure that we have the capacity that we need, not just for today or tomorrow, but also for when we begin to reopen our state, at which time we must be prepared for new cases. It is simply just prudent planning. Tomorrow, I will be, and I suspect I'll have company from my colleagues here, will be with Commanding General Todd Semonite of the U.S. Army Corps of Engineers. He's the top guy, to tour the new bed spaces being constructed at East Orange General Hospital and at Newbridge Medical Center in Paramus. And the Army Corps is providing tremendous assistance at both. General Semonite is the guy you see frequently at the White House briefings and on television. He's an extraordinary leader. I know him by reputation. I've never met him, but I know him by reputation because the defense attaché, when I was served as U.S. ambassador in Germany, was a mentee of General Semonite. And so I'm very excited to be with him tomorrow. And again, I want to thank the Army Corps for all their help. Let's get to today's numbers. We are announcing today 3,643 new positive test results, pushing our total to 92,387. And as you can see, we are announcing with the heaviest of hearts, 379 new deaths. This is the highest single day number that we have hit. And these are not numbers, these are human beings, bringing our total cumulatively to 4,753 lost precious lives. Separately, and as a subset of this, I want to note that we have tested I'm happy to say, every veteran at the Paramus Veterans Memorial Home, and we will be doing the same for those living at Menlo Park and Vineland. Our veterans deserve nothing less. I'll come back to why I was at Wildwood, why I was in Wildwood this morning, but part of that was I went over to the Vietnam Veterans Memorial, which I always do when I'm in Wildwood, with Joe Griffey's my dear friend and a great veteran leader, and said a prayer for all of our veterans, but especially those who have been impacted in our veterans' homes by this awful virus. As I said, we reported another 379 precious lives lost, and the total now is 4,753. We continue to see a trend emerging, and I say emerging in the leveling of the rate of new cases, and you can see that in the chart in front of you. We have a significant, there's no question about it, flattening of the curve. But that is not enough, and I wish it were, to go back to business as usual, not by a long shot. We need to begin to see this curve finally to start its decline. And so we must keep our strong social distancing and policies in place for at least the next several weeks. I've returned to this map, courtesy of the New York Times every day, and it bears out the lines from the graph, and it shows that the rate of the spread, in this case measured by how many days it takes the caseload to double, has also significantly slowed. We must keep this map in its lightest possible shade if we're able to begin to reopen our state. And even yesterday, one day to the next, I recalled yesterday saying that Bergen County had 20 days to doubling. Now that's happily up to 21 days. Let's keep those numbers going up and not down. In the nightly reporting from our hospitals, there are 7,594 residents currently hospitalized with COVID-19, of whom 1,930 are either requiring critical or intensive care. And there are 1,501 ventilators currently in use, and our field medical stations are treating 72 patients. I might add, Judy and Pat, I heard from Kevin O'Dowd that they may actually be taking patients in Atlantic City as early as later today or tomorrow. So Atlantic City is not just looks good in its structure, and by the way, it does, but it's ready to go. For the 24 hours preceding 10 p.m. last night, our hospitals reported 630 discharges. So putting these raw numbers into focus, we can see on this chart that the number of patients in either critical or intensive care has been relatively stable over the past week, as has the number of ventilators in use. Certainly, we want these numbers to decrease before we can move to our next phase, but not seeing any significant increases is a good starting point. Daily new hospitalizations continue to fluctuate, but hold below their recent high, and you can see that. This is an incredibly important metric for Judy and her team and for all of us, and it ties almost directly with the rate of spread that we show on that map every day. The fewer people who test positive, the fewer who need to go to the hospital, the fewer who are in intensive care, the fewer who need ventilators, please God, the fewer who we lose. It's just really mathematical and cause and effect. While this is never abstract, these are human beings. These are precious lives. The fact of the matter is the math is almost explicit when you look at the amount of infections. And finally, we see the number of discharges versus the number of new admittances, and we need to get that reversed again. I think in fairness, Judy, you'll get into this. I think at least one hospital hadn't reported from the day before, so this is a little bit for 4 days. So this is, 400 cases. So this is a little bit, and we are relying on the data as they are submitted to the Hospital Association. So this is a little bit skewed, but nonetheless important and valuable. As I noted, these are real numbers and they are valuable metrics. We know we need to significantly increase our testing capacity. I said this, I think, yesterday, by at least roughly double, if not more, to know We have what we will need to trap and contain future outbreaks. And every other state, by the way, without exception, is facing the same limitations we are in this fight. But the numbers that we are getting from our hospitals is real on-the-ground data. They are not estimates. They are definitive measures of our progress and the challenges which remain. They are among the most invaluable data as we prepare our plans for ultimately reopening our state. As I mentioned a few minutes ago, we have the sad and heavy duty to relay the news that another 379 of our residents have passed. And as we do every day, we would like to honor a few of those lives. Darlene May Andes was a health educator and risk communicator responsible for planning, organizing, and conducting various emergency management operations.
And you have been listening to New Jersey Governor Phil Murphy give an update about what's going on in his state. New Jersey reporting a record 379 new deaths from coronavirus. As you heard the governor say, deaths continue to rise. The curve is flattening when it comes to new cases. But as he said, and this is important, no real meaningful reopening is going to happen until the state sees a measurable decline, not just a flattening, a declining, and he expects social distancing measures to stay in place for several more weeks.
Well, and this mirrors certainly what we have been hearing from the California governor, Gavin Newsom. You know, he was earlier on CBS as well, and he said, I'm not expecting baseball as usual with fans anytime soon. He says not seeing a significant decline that's needed to reopen, and has talked about radically changing floor plans in schools and companies. And this was again Governor Newsom, but again, you're hearing it from all the governors that we've been carrying on Bloomberg Radio. Newsom earlier saying that if California relaxes, could see a second wave worse than the first. And I think this is, again, Jason, we talked earlier about some disconnect, whether it's California, whether it's New York, these major cities, Boston, where you are just seeing the numbers ramp up so dramatically, and then how as a result of sheltering at home has helped to bring down those numbers despite a record number of deaths being reported in New Jersey. And so that if we open up too soon, especially in these dense areas, what does that mean to the virus again? And do we get another wave? And that's why, again, it's just we're in a tough spot, really.
We absolutely are. All right, let's take a quick look at the markets now. Stocks continuing to really hold those losses, Carol. The Dow, the S&P, the NASDAQ all down more than 2%. The Dow down 2.1%. The S&P down 2.6%. NASDAQ down almost 3%, 2.9%.
Well, the Treasury market, we've seen some significant moves. That 5-year Treasury yield setting a record low following the plunge in oil. So a lot to talk about. Kathleen Hayes is Global Economics and Policy Editor at Bloomberg News, on the phone from the Poconos, and also with us, Yelena Shaletyeva, our senior U.S. economist at Bloomberg Economics, on the phone from Long Island. Kathleen, you messaged Jason and me about that 5-year yield, another big move in the Treasury market.
Oh, boy. And, it's not only a 5-year note, although it did trade as low as 0.29. The 10-year note, let's see, that yield is down now to 0.57. The 30-year bonds at 1.16. That yield was actually a bit lower. The price is up more than a point and a half. But bottom line, I think it's a sense now of where are we and where are we going. We know the technicalities of the oil contracts, the futures contracts, and taking the supply versus demand. I think it's really unnerving a lot of people, and we're seeing the response. People are buying up any kind of sovereign bonds they can get. Even high yield issue in the U.S. today is doing fairly well for some companies that are coming out to do that. So, we don't know what this means. We don't know if disinflation turns into deflation. I think there's that concern as well, because that could be a spiral that nobody wants to see, including the Fed.
Yelena, come on in on this. We did get some data on the housing market today, but, we had a fascinating story with Sean Donnan. It's in Bloomberg Businessweek magazine about, not necessarily having the data we need, the best data that, real-time data to get us through this crisis and to make sure that policymakers are implementing the right policy to help the economy the best. So, with that in mind, tell us a little bit about what you're seeing in terms of the data flow and what we need maybe to help the economy even more.
Well, the data, and we have what we have. Even though, as you mentioned, the quality of data might not be as good as it used to be. So one latest example is retail sales, the numbers that we received last week. So already the Census Bureau reported that they were not able to collect the data the same way they used to, because a lot of companies are simply closed. And presumably those were the worst hit companies that they were not able to collect the data from. So the decline was massive in retail sales last week, but it is probably even worse than the data are telling us, just simply because those hardly hit companies were simply excluded from the survey. In terms of what policymakers are looking at, they look at all sorts of different data, and one thing is very clear. It's the economy is plummeting, economic growth is plummeting, and they are doing as much as they possibly can. And we know we look at the balance sheet expansion, we look at different measures and programs they're implementing. So I think, they have enough of understanding of what is going on in terms of the economy, even with the data being so probably not as accurate as it used to be.
And Kathleen, talk to us about central banks here. We saw this surprise cut, I believe, by the Mexican central bank. What do you hear as you think about central bankers around the world? I know you keep a close eye on those guys over in Asia as well, obviously, as on the Fed here in the United States. Where are central bankers right now?
Well, they're ready to do more. That's what it seems like, doesn't it? I mean, we saw the minutes from the Reserve Bank of Australia's last meeting overnight. Then still low president or, head of the RBA spoke looking for a 10% contraction in GDP. And remember, Australia is a country that had 28 years without a recession. So they are clearly, so they are clearly now, ready to do whatever it takes. China has eased up a little bit more, and I think they're expected to do more. And, so the BOJ now, of course, what can they do? Well, we're waiting to find out. They'll be meeting next week. But I think it's like, we'll do whatever it takes. We know the balance sheets are big. Terrific story on the Bloomberg on how big the balance sheets are and how hard it's going to be to work them down someday. But it's obvious that's not what central banks are worried about now. They're just worried about convincing people, I think, that they can get this done and ride us over to the next side of what's happening with the virus.
Well, and it's, I do love that story by Matt Bosler. Yelena, I mean, when we look at the balance sheets, we can't get caught up on it right now, right? Because we do have to, as Kathleen said, do what we need to do.
Do what we need to do. Looking at the balance sheet in the United States, we are at 6.4 trillion in terms of the balance sheet as of the last week, and our own projections suggest that we will top 12 trillion by the end of the year. Wow. This will be more than 50% of GDP. So just looking at how much they're buying daily, it's 40 billion roughly per day, and that compares to 40 billion in agency MBS and 45 billion in longer-term treasury securities a month they were buying during QE3. So this is really massive. But it's not only QE. It will also, we will see the expansion coming from different programs to support small businesses, municipalities, and larger corporations.
All right, we're going to leave it there.
Go ahead, Kathleen.
Oh, yeah, go ahead, Kathleen.
I was just going to say, I guess, if we are worried about deficits as the debt grows, but at least with yields so low, I guess that's one of the blessings of having this bond rally is as much as the debt sold, at least it's going to be a low yield that may save us a little money down the road.
Let's not forget, we've got a Fed meeting coming up on April 29th.
Yeah, interesting. Yeah, that'll be one to watch for sure. All right, yeah. Kathleen Hayes and Yelena Shalecheva, we really appreciate everything you do for us. Kathleen joining us from the Poconos and Yelena joining us from Long Island, I believe. And, you know, in the world of economics, that's what's going on. But we shouldn't forget the world of politics because a lot going on in the individual states. A big meeting coming up in just a little while, probably within an hour or so. Andrew Cuomo, the governor of New York, heading down to meet with the president. I gotta say, that's going to be something to watch.
To be a fly on the wall.
To be a fly on the wall. And meanwhile, on the other end of Pennsylvania Avenue, a deal actually getting done. Ryan Teague Beckwith is watching all of that for us. He joins us on the phone from the nation's capital. All right, RTB, bring us up to date. What do we need to know? We got a deal?
Yes, there is a deal, and I would say this is sort of the rare occasion where Trump, at least the Trump administration, the Trump White House, is able to fulfill that kind of art of the deal premise that he made his candidacy around, but then really wasn't able to do. It's bipartisan. Both sides are getting something they want. Both sides are not getting something they want. In this case, there's more money for the Paycheck Protection Program. Those are the loans that were intended for small businesses, not all of which went to small businesses. In this case, they're going to set aside a chunk of it, about $60 billion, for smaller businesses only. But there's still $310 billion for the program that is for, small businesses, quote unquote. So you have that. There's $25 billion for testing. And $75 billion for healthcare providers. What's not included in it is money for cities and states that are struggling right now.
Yeah, and folks are certainly struggling quite a bit. Give us just a brief sense of the politics as they played out here, because there seemed to be a little bit more, I don't know if anything's friendly among the R's and the D's on Capitol Hill, but the first go-round, there was a sense of urgency. Here, there was a fair amount of gamesmanship, it felt like, Ryan.
There's short-term sort of gamesmanship going on, and there's also kind of a long-term play here. The short-term is that the Republican senators wanted to just go ahead and add more money to the Paycheck Protection Program as is. They didn't want to make any changes. They didn't want to add anything else. So that was something that they wanted. They brought it up and tried to sort of make it like, oh, Democrats aren't helping small businesses. But that was kind of the usual thing that happens on Capitol Hill. Whoever's in charge tries to always make the votes as uncomfortable as possible for the other side. Democrats held their ground and said, we're not playing with that. We want these other things. The longer-term gamesmanship going on here is that the Trump White House in particular wants states to kind of, do what it wants. In particular, Trump is very eager to reopen the economy sooner, and he's calling on states where he has allies to start that process. Some of them are kind of relaxing it a little bit. In Georgia, they're letting people go get haircuts starting on Friday, things like that. But the blue states are kind of, banded together, formed their own little regional groups and said, we're going to make a decision as a group. And they seem not ready to do that. So I think that what you're seeing with the aid here is that the Trump White House doesn't want to give them aid because that's something that it could use as leverage.
That's interesting. Well, I do feel like there's a little bit of a federal squeeze going on here. And what's interesting is if you listen to what, Governor Newsom of California said today, we're not seeing any significant decline needed to reopen. And, they consistently, these bands of governors on the coast are saying we're not going to do it till we're ready. We're going to follow the healthcare metrics because they're concerned about a second wave. And I just wonder how far the federal government, from what you're hearing, is willing to kind of push them to the edge.
Well, folks who are critics of President Trump would point out that he was impeached for attempting to use money as leverage to get the president of another country to do his bidding. So I think that in this case, it's a very similar dynamic. He has the ability to give them money because the federal government can run a deficit. Indeed, it's very good at doing that, whereas the states cannot. And there's an old saying that whenever there's a recession, suddenly we have 50 Herbert Hoovers because I think all but maybe one state, they have a requirement that they cannot deficit spend in their constitution. So the states are going to start running low on funds soon, and that is a piece of leverage that the federal government has over the states. It's not one that's been used like all that often, but it is used in smaller ways. Things like speed limits and things like that have been federal highway money was sort of premised on you've got to all have a uniform speed limit and things like that. So so this is a little bit more aggressive, and I think in part it's also that the president wants to reopen the economy, but doesn't want it to be his decision to do so, and can't really. So he would like the governors to do it, and then if it goes poorly, then it was their call.
I mean, it's not a bad. I mean, just from a purely strategic perspective, it's not a bad strategy. All right, Ryan Teague back with. Thank you so much. We really appreciate it.
Pretty creepy game of chicken, though, man.
It is high stakes for sure. So always appreciate RTV joining us, and we will have some headlines, I am sure, after the close of trading at 4:00 when Governor Andrew Cuomo makes his way to the White House. I mean, the relationship between those two New Yorkers has been one of the most fascinating to watch. I did have someone, an investor that I was talking to earlier today, Carol, say to me that they would feel like we were back to normal when people started disliking Andrew Cuomo again.
I also see a Netflix series out of this, right, between the president and the strong governor. Like, right, you can see it play out in, or an existing series.
And then handsome Gavin Newsom sort of swoops in to play the foil.
House of Cards, right? 2020 version.
Goodness. All right, let's get a check on what's happening in the business world with about a half hour left to go in the trading day. Hey, Charlie Pellet.
Well, I thank you very much, Jason Kelly. Indeed, lots going on right now. As you mentioned, 29 minutes to go ahead of the close. Let me give you the numbers. I'll give you the other stories in just a moment. First of all, S&P is down 74, a drop there of 2.6%. NASDAQ down 249, a drop there of 2.9%. The Dow is down 510, a drop there of 2.1%. Yes, I hear you. Oil, the major story. Give me a quote on June West Texas Intermediate, down 34%, $13.50 a barrel on June WTI. But some of the other major stories today, Chipotle Mexican Grill will pay a $25 million criminal fine in an agreement with federal prosecutors over allegations its food sickened more than 1,100 people across the U.S. between 2015 and 2018. Chipotle lowered today by 3.1%. General Motors shutting down its car-sharing service Maven. This according to a report from TechCrunch. And also the New York Attorney General is investigating whether broadband and cable TV provider Charter Communications violated labor laws by requiring some non-essential workers to report to the office during the coronavirus pandemic. Now, what about the emotional and mental health of doctors, nurses, first responders, and all of the other heroes working around the clock on the front lines? Michelle Patch is an assistant professor of nursing at Johns Hopkins Bloomberg School of Public Health.
We have those who are tired and angry and worried, and they worry they don't have what they have to safely continue, and they're physically and mentally exhausted. They realize very much so that this is a marathon.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Beyond Meat shares, they are moving higher today on a down day for the rest of the market after announcing it will enter the Chinese market through a partnership with Starbucks. We'll be hearing from Netflix after the closing bell. Netflix shares up now by 0.8%. 10-year yield 0.57%. Gold down 0.5%. Again, worth repeating crude. June West Texas Intermediate crude now at $13.61 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio. I believe a little Elvis Costello here to take us into the chart of the day. Dave Wilson, do I have that one right?
You do, and it's actually something a listener suggested based on what's been happening in the oil market. So
less than zero.
Yeah, absolutely. I mean, we saw that happen to crude. So, it's actually part of a bigger story that the chart really tells, because it's focusing on the relationship between earnings and valuation for the S&P 500. Of course, energy is a piece of that. So what's happened, in the last couple of months, as we've seen a bull market turn into a bear market for U.S. stocks, we've seen earnings come down 18% if you look at profit estimates for the S&P 500. So we're talking about what are called forward earnings for the index. Now, you could argue they could come down a whole lot more, but what you can argue is that if you kind of take that and turn it into a price-earnings ratio for the index, it's actually higher now than it was at the peak of the market in February. So after 11 years of a bull market, the S&P 500 was valued at 19 times forward earnings. Came all the way down to like 13.5. And then as stocks have rebounded, we've seen that forward PE rise to 19.7 as of yesterday. So stocks are more expensive now than they were when the bull market ended, which is kind of mind-blowing if you think about it. It just shows you how fast share prices have recovered here.
Right, and earnings have collapsed, right?
Absolutely. But you figure if earnings would be coming down, people would be less willing to pay for whatever earnings are left. Right. And in fact, it's been exactly the opposite. You know, that 18% drop in stocks. I mean, how much did the S&P 500 bounce off its low? Like 27%? You know, it just goes to show you that, you know, valuations are still an issue for stocks, even though they're down from where they were 2 months ago. Really, that's something that Keith Parker, who's a global strategist at UBS, pointed out in a report the other day that had a similar chart. And the way he figures it, that stocks here are really dependent on where earnings may settle, to use his words. So,
well, the market, I just think about, right, how much forward they're looking, you know, and I guess as we get more information about 2021 or even later this year, what it looks like. But
that is next year. You're like 20.
Well, but I mean, even later, or later this year, right? Like, no, but you're right. Just like, you know, investors, right, Dave, have got to just be looking forward because that's all you can do at this point because it's not great the next few months or the next few quarters.
Absolutely, and it's strange to be talking about 2021 at a time when we don't even have most of the results for the first quarter of 2020, but certainly it looks like a lot of investors are focusing on next year. And as far as this chart goes, if you want to know more, send me an email. I'll get it to you with the explanation that goes with it. And everything I do going forward, just send me an email. It's dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, and it's interesting to take a look at the trade here, Dave. I mean, certainly stocks still significantly down, the S&P down better than 2%, but off its lows for sure. And a headline just crossing the ECB, the European Central Bank, holding a call tomorrow and may discuss junk bonds as collateral. So this
remember when junk bonds were risky?
Yeah, that was before the Fed started buying exchange-traded funds that owned them.
Yeah, exactly. Right, exactly.
Yeah. Well, I mean, look, we're seeing an entirely new playbook. I think that is fair to say. And even, you know, Kathleen Hayes was saying earlier to us, Dave, that, you know, there's still a lot that central banks can do. So we'll see what else is in that playbook.
Well,
all right, Dave Wilson, go ahead.
Well, I just want to say that, you know, in terms of what Dave was talking about, valuations in the market, like a stock like Netflix, which is up almost 37% this year, we'll get their earnings after the closing bell. Forward-looking PE right now is about 73. So we will get...
Whoa.
I know. So, you know, what, Dave, like you're talking about, we'll get a reality check here about... All right, investors, maybe you've gotten a little bit ahead of yourself here when it comes to Netflix, and we'll see what they have to say. I mean, sure, their numbers are up. Everybody's at home, but does that continue as the world reopens?
Yeah, and you're talking about a stock that set a record last week and is close to it now. So, you know, it's definitely, you might say, fully priced at this point, you know, just on that basis alone.
Yeah, on that basis, it does feel... better than fully priced, that's for sure. All right, we will look forward to Netflix earnings after the close. We'll also look forward to Dave Wilson's Stock of the Day. Dave Wilson, thank you so much. So that's what we've got coming up. We'll drive you to the close. Then we'll talk about Netflix and other names with Dan Morgan, our buddy down in Atlanta at Synovus. Also going to catch up with Paul Krugman. Really looking forward to that. You know, a lot of what, I guess we talked to him, 3 months ago, 3 months ago there in our studio. We were still in our studio, so it was at least 6 weeks ago.
Right.
Talking about his new book, which is a collection of a lot of his columns over the years and some new material about zombie capitalism. And man, he is seeing some things now, as we all are, for sure.
Well, and I love, you know, he really takes a look at the economy. He takes a look at politics. He talks about, you know, he looks at the world
income
from a very broad-based view. Exactly. And so what do we do to not only create a sound economy, economy, but one where more people are benefiting. So I am curious, especially with another stimulus package that looks like it's going to go through, that looks like it's targeting those smaller businesses, which is what I thought the initial package was supposed to be helping. So we'll see
not
whether
the
or
Shake
not.
Shacks of the world?
Well, I'm just going to say. So let's see whether he thinks we're moving in the right direction. And I'm curious what he has to say about Sean Dowden's story about, we don't have the data, the real-time data that we need to make sure that we're setting the right policies in place to keep the economy at least, not falling apart completely and to be in a better place on the other side of it.
We're also going to hear from the CEOs of Headspace and Planet Fitness. So all that ahead. First, let's get to Bob Moon for some World National Headlines. Hey, Bob.
Don't know about you guys, but this cabin fever is really catching up with me today. As state and federal leaders tussle over reopening the U.S. economy, some corporations are taking small first steps toward getting back to work. There I said it. But in so many cases, it's easier said than done. Today, Maryland's Republican Governor Larry Hogan was on ABC's The View and cautioning it's still just too soon for his state until data points in that direction.
In the Washington area, we just announced here today in our region 25,000 cases and 1,000 deaths. So we're not able to start opening things up. It's the wrong time, according to all the experts and according to the president's own plan.
If wishing could make it so, today Germany canceled Oktoberfest. That's 5 months away, sending hopes of normalcy crashing against pragmatism. And ESPN's schedule isn't even safe when it comes to June's National Spelling Bee, scrapped for the first time since World War II. We have little way to know what's really happening in North Korea, but there are reports President Kim Jong-un is gravely ill after surgery. Bloomberg's Irv Chapman has more.
The North Korean regime is handling Kim's situation differently from past practice, analyst Sue Kim of the Rand Corporation said in a Bloomberg interview.
When the regime had health issues with the leader, they would try to either deny or to prove that their head leader is alive and well and fully functioning, and going on these site visits to assure that we are in fact stable.
Kim Jong-un has very young children, analyst Kim said, but his sister is in a prominent position, as are the leaders of the North Korean military. In Washington, Irv Chapman, Bloomberg Radio.
Global News 24 hours a day, I'm Bob Moon.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize.
We're all having to get used to the new normal. And at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is,
or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn. The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spittin' Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, I just...
Carve up the ice with NHL at the rink.
The other day, I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now. Like, all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn. Get ready for the 2020 NFL Draft with TuneIn.
Do your homework on this year's top prospects, rising stars, and late-round sleepers with football podcasts like Move the Sticks.
Is my pick because I know he is an athletic freak, a guy that is capable of doing it all. He can blitz, he can run, he can cover.
And when the draft gets underway on April 23rd, follow every round and every pick for free.
In the 2018 NFL.
It's always football season on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got 13 minutes to go ahead of the closing bell. We've got the Dow, the S&P, and NASDAQ all trading lower. Let's head right over to the first word breaking news desk for today's afternoon update. Here he is, keeping an eye on oil. We've got Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure again amid another plunge in oil. Dow's currently down 545 points. S&P's down 78. NASDAQ is lower by 269. The U.S. 10-year yield at 0.58%. WTI crude futures fall 34%. We're down as much as 68%. Small caps down 1.7%. Transports sink 100 points. And semis are under pressure, down 4.2%. Leaders to the upside in the Dow, ExxonMobil and Travelers, Merck, Boeing, and Intel led to the downside. After earnings, IBM fell 3.4%. And in other news, ValueAct took $1 billion stake in Nintendo. Wrapping things up, Netflix and Chipotle report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
All right, it looks like we may have lost Charlie Pellet there for a second. You are listening to Bloomberg Business Week here on a Tuesday afternoon, and this is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the Drive to the Close. With us is Jimmy Cuellar, portfolio manager at the Buffalo Small Cap Fund. Joining us on the phone from Mission, Kansas. Got to point out that fund, a top performer, beating just about all of its peers over the past 5 years, returning on average nearly 8% annually. Jamie, good to have you here with Jason and myself on Bloomberg. How are you? And tell us a little bit about what's going on in Kansas.
I am doing well. Thank you for having me on. We're quarantined like everybody else, so a lot of the same.
And so what do you make from the market, of the markets sitting there in Kansas? Because, I feel like our view is a little bit colored by, a day-to-day that is probably similar to yours in broad strokes in terms of, work from home and all that stuff. But, being in the epicenter, I do think that changes maybe our perspective a little bit to the negative. As Carol pointed out, you have done extremely well by any measure in the markets, and focusing on small caps. How do you cut through the noise and find the signal here?
Typically, we do have the same issues, obviously, that's going on in New York. Clearly, we don't have as bad of the cases as you guys are having there. And it is a slower pace here in Kansas, thankfully. But we do obviously have the same concerns. The market volatility that we're seeing hits us just as hard. As far as how we're kind of handling all of this, we have a process that really kind of doesn't change despite what's going on in the economy. We tend to invest in companies that benefit from long-term trends, and those trends are going to remain intact regardless of what the economy does. But obviously, we're having to scrub our portfolio and make sure that companies they will be impacted to a certain extent by a weaker consumer and a slower economy. And clearly, work from home is changing everyone's work environment. But we're really looking for those companies that are positioned well during this, and hopefully will actually come out of this even stronger, provided they have a decent opportunity for recovery.
Well, Jamie, I'm curious about kind of changes you might have made then to your portfolio. As I mentioned, your fund has done really well consistently. It's not just a one-year thing, but over the past 5 years, at least based on Bloomberg data. So have you made any changes because of the situation, because of the virus impact? Tell us about that.
We've made a few changes. Thankfully, once we saw this start to hit, we really took a look, especially in certain areas like consumer, in terms of how hard are these companies going to be hit, and what's going to happen to their revenues overall, and what can they do to really pivot a little bit and change what's going on. Certainly, other sectors like healthcare, if you have elective surgery, those are going to be in trouble. If you're a tech company and you have a lot of small and medium business exposure, or you're exposed to some industries that could be hit harder, like travel, we really need to scrub through those. We've made a few changes here and there. We've actually even made some ads, though, as well, companies that we think that could even benefit from all of this overall. Clearly, you need to make sure that these benefits are going to be sustainable and not just a flash in the pan, but you really want to find those companies that have great management teams that can pivot well through this.
So, Jason, I love talking about specific stocks. So give us some names that maybe you've been buying into as a result of this thesis.
Well, I can't really talk about ones that we've been buying during the quarter, but I tell you some ones that we do like and have liked coming into this that I think you could take advantage. So the first one is called Lovesac, which is an interesting name, but it's one of our smallest companies we have overall. It's a $150 million market cap company, so pretty small. They make seating, so a modular sectional couch called a Sactional, and what's probably best described as a modern-day beanbag called the Sac. So very innovative products. They sell online as well as through showrooms. The company got really just trashed through this. They first got hit by the trade war in China, had to adjust their supply chain, and then they obviously had to close all their showrooms due to the coronavirus. So the stock got completely orphaned. At one point, this was a $40 stock. It traded all the way down to $4. And it's a founder-led microcap company, which you kind of, worry about good decisions that management makes. But these guys have really done just an exceptional job conserving cash, cutting expenses, pivoting their advertising and their customer sales support to really support online. And they reported a couple of weeks ago, done an excellent job here. They're starting to see a lot more improving trends after a rough couple of weeks. Their e-commerce business was up over 400%. They think that they can be cash flow positive here going forward, and actually think they'll be back to plan here in a couple of weeks.
Yeah.
So these guys have pivoted great. Stock's still oversold. It's down to $10, and like I said, it was up at 40. I think these guys have a lot more to go.
And it looks like no debt. And it looks like no debt on their balance sheet. I mean, their balance sheet looks pretty cool, even with all the stuff that's going on.
That's right. They're not a big company, but they've got about $35 million in cash. I think they're going to be a survivor, and these survivors, especially in consumer that can make it through this, they're going to have a lot less competition going forward, and they're going to be winners.
I remember hearing about this. The ticker is LOVE, L-O-V-E. I believe Dave Wilson, our stocks editor, had it as his stock of the day a while back, and I just remember being uncomfortable hearing Dave Wilson say Lovesac. In any case, Bandwidth, B-A-N-D, is another one you like. Only got about 40 seconds here, but give us the pitch on that.
Yeah, so this is a cloud-based communication services company. They use their software expertise to get enterprise customers to carry their voice, and even more so these days, their messaging over Bandwidth's network, which they own themselves. So they carry voice traffic for a lot of the next-gen cloud-based service providers, companies like RingCentral, 8x8, Microsoft Skype for Business, and even they'll do some audio for video conferencing companies like Zoom, which, as everyone knows right now, is just crushing it. So right now, their customers are all market share gainers. They're getting bigger and bigger, more strategic accounts. They've been expanding into Europe with a lot of their customers. And like I said, they own their own network. Right. So incremental margins here on incremental revenue are going to be outstanding. And again, balance sheet's in great shape here. Just did a convert, head into this. Solid balance sheet, and they're looking good going forward.
Interesting time to be a stock picker. That is for sure. I love the bottoms-up analysis. All right, Jamie Cuellar, portfolio manager for Buffalo Funds, on the phone from Mission, Kansas. The Buffalo, I believe, refers to the actual, Buffalo, where the buffalo roam, not Buffalo,
I've seen Buffalo. Have you seen Buffalo?
I have, and I've seen your pictures from Colorado.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind giving up. I wouldn't call it a cush job because you were traveling across the
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Down Tuesday for the Dow, the S&P, NASDAQ. Oil collapses again. West Texas Intermediate plunging another 36%. I'm talking about the June contract here. WTI now at $12.91 a barrel. Equities lower across the board here with the S&P down 86. A drop there of 3.1%. The Dow down 630. That was a drop of 2.7%. NASDAQ down 297 points, plunging 3.5%. Bottom line here, S&P plunging the most in almost 3 weeks. U.S. COVID-19 cases rising 5.7%. This headline on the Bloomberg, biggest jump since April 10th. Treasury bonds rallied as turmoil in the crude oil futures market triggered a fresh bout of risk aversion. The 10-year today, the yield on the 10-year, 0.56%. Gold down 0.6% at $16.85 the ounce. Well, as for the market backdrop, Jamie Cuellar is portfolio manager at Buffalo Funds. He was our guest moments ago right here on Bloomberg Business Week.
Obviously, we're having to scrub our portfolio and make sure that companies, they will be impacted to a certain extent by a weaker consumer and a slower economy. And clearly work from home is changing everyone's work environment. But we're really looking for, those companies that are positioned well during this, and hopefully will actually come out of this even stronger, provided they have a decent opportunity for recovery.
And we're just getting the latest numbers out of Netflix. First quarter streaming paid net change up 15.8 million. Estimates up by 8.5 million. Netflix first quarter revenue $5.77 billion, up by 5.5% quarter over quarter. Again, we are waiting to the latest numbers out of Chipotle Mexican Grill and Texas Instruments. So again, recapping here, stocks lower across the board. A lot of earnings reports to tell you about. We've got you covered. S&P down 86, down by 3.1%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
Move around. Motion creates the motion.
I feel the earth move under my feet.
You move like they do. I've never seen anyone move that fast.
All right, people, let's move like we've got a purpose.
Company's called Movers and Shakers. They cost a little more. That name cracked me up.
Bloomberg Business Week, Movers and Shakers, with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, yes, indeed. Time to take a look at some of the movers and shakers. We've got a bunch of earnings, as Charlie just mentioned, crossing the Bloomberg terminal. Netflix has been on a tear this year. It was down about 0.8% today in the regular hours trading. It is soaring in the after hours.
They're continuing after hours, Carol.
It was up as much as 10%, now of about 8 or 9 or so. Let's get to some of those headlines. First quarter revenue, $5.77 billion. That's up 5.5% quarter over quarter. First quarter streaming paid net change, that is up 15.8 million. The estimate was 8.47 million. So keep in mind, the Wall Street community had these estimates based on a normal quarter for Netflix, right? Business as usual. enter the virus. And we've talked about so many people streaming much more as they are sheltering at home. And so those streaming numbers roughly double. The company's also talking about the second quarter. It's the second quarter revenue of $6.05 million and second quarter EPS of $1.81 a share. So again, investors making some sense out of it as they go through the numbers. Lots of questions, I'm assuming, on the call. Stock is up 10.2% here in the after hours after being up close to 40% in the regular trade year to date.
And we're going to dig into those numbers in just a few minutes with our buddy Dan Morgan down in Atlanta. I do want to talk about Texas Instruments a bit. The forecast is the thing there. That's the redhead. Second quarter revenue, $2.61 billion to $3.19 billion. The estimate there had been for $3.05 billion. So in, kind of in the range there for sure. Let's just take a look
Stock
and see.
Stock is up almost 5% here.
Right?
Yep, up almost 5% here in the after hours. So we're seeing that stock certainly take off. And that's going to be an important conversation, too, about watching these chip companies, because companies who are starting to get back to work, they're going to be accessing the chip sector, and it will hopefully give us an early indication of things starting to maybe get back to normal as factories get back to normal and, we get back to making things that use a lot of chips.
And actually, that's a name that we'll probably ask Dan Morgan about as well. He and I have been talking about Texan for years. That's one where, they are primarily in the business now of analog semiconductors, meaning tons and tons of different electronics across the world, cars and other home devices and things like that. So you wonder if they're getting a benefit from that or not. But we'll see what they have to say. That's certainly going to be a conversation we listen to as well. We're also, as you heard Charlie say, awaiting Chipotle, a company you're very familiar with. Carol, their stock was down today, in part because they had settled, or they had agreed to pay a penalty, I should say. That goes back to that big health scare, a $25 million criminal fine for food poisoning, 1,100 people affected by that. And, it seems like a long time ago, and yet it still had been talked about. And listen, food safety is something that continues to be something folks are concerned about.
So a $25 million fine, right? Is that what you just said? So, and this is a company, just to give you a little bit of perspective here, that's got roughly about $5.6 billion in revenues for all of 2019.
Right.
So just a little perspective, and we'll see what they have to say. But, anytime you can put a settlement behind you, right, you're able to move on. We did want to mention just quickly Beyond Meat, because that is certainly one that has taken off big time today. A deal or working with Starbucks. Stock was up about 7.4% in the regular trade, and the stock is up roughly 12% so far this year, Jason.
Yeah. I love Beyond Meat. Had some Beyond spaghetti last night. All right.
Happy for you.
All right, volatility. You're going to pay me back forever for that spelling bee ref. All right, the VIX volatility up about 3.8%, closing at 45.48. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson. Dave Wilson back with us for your stock of the day. And just before you get to it, Dave, very quickly, wasn't Lovesac one of your stocks of the day last year?
It's something I've talked about in the past, yeah.
Okay, there you go. All right. Go
on.
All
right, then. But today it's Neighbors Industries, Jason. It's an oil driller that operates on land and offshore. The company was founded in 1954 and went public in 1978. The ticker is NBR. Neighbors shares peaked in mid-2008, around the time that crude oil prices set records. And the shares have worked their way lower the past few years. Neighbors' decline is worsened this year as oil has tumbled. Since March 9th, the stock is traded for pennies. That put the company in jeopardy of being delisted by the New York Stock Exchange, which has a minimum price of $1 a share. In response, Neighbors plans a 1-for-50 reverse stock split. The move will leave stockholders with one share for every 50 they now own. It's due to take effect before trading opens Thursday. Now, the company followed the example of shale producer Chesapeake Energy, which I talked about last week. They did a 1-for-200 reverse split. Now, Neighbors shares dropped to their lowest price since August 1986. after the reverse split was set up. They closed with a loss of almost 20% at just 22 cents a share.
All right, Dave Wilson, really appreciate it. Thank you so much with his stock of the day. As we mentioned, we were going to hear from a lot of governors, and we do want to take you to Connecticut, where the governor there, Ned Lamont, is giving an update on the virus in that state. Let's listen in.
Is a lagging indicator, and the currently hospitalized, it goes up a little bit, but you'll find the 3-day trend is still headed down. Next slide, please. Again, you can see that the hospitalization in Fairfield is heading down again. That means capacity. That means we've reached our peak in the southern part of the state. Next up is New Haven, where that is flattening out. But unfortunately, you'll see that Hartford is continuing to ramp up. And that's where you see this slight overall increase. So we're not out of the woods yet, but at least you see the progress we're making thanks in part to social distancing. This is one that always I find interesting because while there are ups and downs, at least you can see the 3-day trend, and hospitalizations is one way we can tell about our capacity, one way we get a real insights into infections into a regional community. Obviously, testing is going to be a lot more exact than that. And the next slide. This I find more relevant. This is daily admissions. The other numbers are net admissions and discharges. So a couple of things you see here. Yellow is Fairfield. You can see where yellow peaked at over almost 120 admissions a day, and now it's down to less than half that if you follow that yellow line. The green line is New Haven. You can see it peaked at a little lower amount, 80. Social distancing not as severe in New Haven County, and New Haven is way down now. And finally, you'll see Hartford, and Hartford, as I suggested before, is continuing to ramp up. Not as high as it was, say, 5 days ago, but still on the general upswing. And this next slide is really where we want to focus. This is what our daily testing has been. We've averaged on average about 2,600 tests a day. You can see it goes up and down a little bit based upon lab capacity, yes, but more importantly, reagents and swabs and a lot of what we talked about yesterday. And this is what we're really going to focus on today. A couple of things about testing that's important. One, a very preliminary, I told you yesterday about the app called How We Feel. And thanks to many of you, the number of folks who signed on to How We Feel, that app, you can do it at Google, you can do it on your iPhone, went up 5 times. So now we have tens of thousands of folks, and we're able to get real-time information just in terms of symptoms going forward. So I urge you, tell your friends to go on that app. It's really important. We're also distributing the smart thermometers again as we speak. Mainly at this point, the folks who are getting the discounted lunches. But most importantly, I just wanted to say this venture between Quest Labs and Hartford Health is just so important. What that means in terms of our being able to ramp up our testing capability to see who is infected. And as Steve will tell you, about 40% of the people who are infected don't even show symptoms yet. And right now, we only are able to test people who are showing symptoms. So we're missing an awful lot of the folks out there. And it's important that we be able to capture that if we're able to get back to work safely. And right now, Jeff, you're doing, a few hundred tests a day? And this will ramp us up to 2,000 tests a day in the very near future. And it's 2,000 tests, right here in Hartford, but also in Norwich, in Bridgeport, New Britain. And Jeff was telling me they're going to have a mobile testing facility. So we'll be able to get those tests out to nursing homes and correctional facilities and homeless shelters and those places where we have the most contagion. And Steve has said these tests will be able to turn them around in 24 hours. They have drivers all over the state, drive that test samples up to a lab in Massachusetts and get that turned around. And that's just incredible in terms of what that means and our ability to get this state moving again. Testing, the PPE, we do have the PPE beginning to come in now. We got over 100,000 new N95 masks, doing those for our nursing homes in particular, 2 million surgical masks to make sure folks who are doing food, daycare, and others We can get that out into the working community, those essential businesses, to make sure that they're safe going forward. And if you're from a smaller business, you can't get a hold of those surgical masks because 8 o'clock Monday night, that was when we required the mask for all people working in those businesses.
All right, so you've been listening to Connecticut Governor Ned Lamont giving an update, mirroring in many ways what we've heard from some of the other governors out in California, of course, in New Jersey, New York, about the situation and what needs to still be done to get our hands and our heads really around the virus and get to a better place where we can start talking about reopening economies. In the meantime, Jason, a lot of talk about earnings here after the close. We got a lot of big reports.
So many big reports. Brand names, I should say. Chipotle is one that we were keeping a close eye on, withdrawing their prior fiscal 2020 guidance. That's certainly been a theme. Their first quarter revenue coming in, reports first quarter adjusted EPS, of $3.08. The consensus had been for $2.90.
Stocks up.
That's adjusted,
Stocks up more than 4% in the after hours, almost 5%. And I do wonder how much of it too is getting maybe that settlement behind them. The legal overhang that's been on them after years of problems. Certainly at a bunch of their restaurants. Texas Instruments also out. That stock we're seeing up about 2% here in the after hours. And then of course we talked about, I should mention, Snap was also out with their earnings after the close. Stocks up more than 10% here. And then we had Netflix, and we saw that stock rallying big time in the after hours. This tech community and what it says maybe about the outlook, the markets, I think is going to be important.
Well, and Netflix, it is a name that is on the tip of everyone's tongue for sure. So many people, as they are sheltered in place, and many of them apparently subscribing to Netflix. Let's break it down. Let's understand what's really driving this and how much of this was a huge surprise. Dan Morgan, Vice President, Senior Portfolio Manager for Synovus Trust Company, based in the ATL. Always good to have him on the show. He and I have known each other for, Dan, roughly 125 years?
123.
Yeah, there you go. Who's counting? So Netflix, wow, what a beat. What a surge here. Obviously, everyone, as we said, is using Netflix, but this still caught folks by surprise. Why?
Well, it's very interesting, Jason, because, we started off going into this first quarter with an estimate of, this was coming from management, of about 7 million new subscribers. And then we had all this data coming out from various sources showing that the number of downloads was huge, like you said, in the first quarter. So then the estimate started to move up to approximately 8.5 million. And I almost had to make
double
sure
check.
I was reading this right. I was like, I saw the number. I'm like, wait a minute, let me go back and look at the press release. But anyway, 15.8 million is mind-boggling, quite frankly. I think from all estimates that were even at the high end of the range, I heard somebody playing around with 9 million, but this number is just huge. And then to follow it up, they came out with second quarter guidance of 7.5 million. Even the upped consensus coming into this was at 5.5 million. So not only did you blow numbers away in the first quarter, basically double what you were, what everybody was looking for almost, but you actually kind of upped your expectations going in the second quarter. So to me, it was just a mind-boggling number. Like I said, Jason, Carol, when the numbers first came out, I don't know about you when you were on the radio show, but I was like, wait a minute, I must be misreading this. I've got to dig a little deeper. But
you always do a gut check to okay, do we have it right? What's interesting, and our Jerry Smith, who covers the media space for us at Bloomberg News, says, here's what Netflix says, and this is what's important, right, about what the outlook looks like for the company. Netflix says it's seeing, quote, temporarily higher viewing and increased membership growth during the lockdown, but that's being, quote, offset by a sharply stronger U.S. dollar. So they're talking about their international revenue impact. But the company, here's what I also think is interesting, Dan, the company says it expects viewing to decline and subscriber growth to decelerate as home confinement ends, quote, which we hope is soon.
Oh, okay. Well, that's nice.
Which maybe explains why the stock, which really took off, maybe has paired some of that enthusiasm.
Right. So you had, Carol, a lot of expectations over the last 30 days with all this preliminary data coming out and really trading the stock up. I mean, it was down in the low 300s, right, back in just the end of March, made a huge move. So the bracket really went up in terms of expectations. So I think what they're trying to do, Carol and Jason, is they're trying to be smart about this and say, look, we're not going to keep up at a pace of 15 million, right, people per quarter. So let's kind of put some water on the fire here and get back into some sort of realistic number in terms of new subscribers. The other thing too we have to bear in mind is, are they going to be able to retain these, right? They got this huge jump up, right, and then everybody goes back to work and they're like, should we keep doing it? And then I think they're kind of preparing us for that reality.
Well, and that you went right where I was going to go next, Dan, which is, how do you model something like this? It's got to be difficult with a company like this, any sort of subscriber-based situation at a time when this disruption is so dramatic. As you say, everyone's habits have radically changed, because this is also coming at a time where it's the most competitive it's ever been for Netflix. You have Disney Plus, you have Peacock coming out, you have Amazon Prime Video, obviously, and on and on and on, Hulu, obviously. How do you sort of model this going forward?
Well, you're right. Another thing, too, is everyone is talking about how, the life and blood of Netflix is obviously new content, right? So then all of a sudden you've got this COVID-19 distancing thing going. So does that hamper your ability to create new content, right?
Right, on the production side.
On the production side. So there were some even discussions about, in regards to what was going to be the impact in terms of, content spend rates, which were expected to be about flat from 19 to 20, but were you going to have some things roll into 2021, and then how would that impact Netflix? So I think you're right, Jason. I think we've got to take this quarter as an abnormal event. We can't extrapolate out in terms of saying they're going to be 10 million next quarter and this is going to continue. Right. And I think you do have to take into account the fact that, like you said, Disney Plus, from their November launch, has got 50 million subscribers, are going to do potentially 70 million by year end. Those are huge numbers. So how does Netflix navigate through this more competitive environment? And I think we do have to look at this as just a blip.
Yeah, they said, that Netflix is taking the opportunity. This is just our team on our live blog. Netflix taking the opportunity to acquire some titles that might not have otherwise gone straight to streaming. And it recently bought Paramount Pictures, The Lovebirds, Legendary Pictures, Enola Holmes. So, certainly thinking about focusing on making sure it still has content on the platform, right? Because all of us have a lot of extra time at home, and, you want to make sure that people stay on the platform, that there's content that they find interesting. The other thing they said, in our 20-plus year history, we have never seen a future more uncertain or unsettling.
Wow.
Yeah.
Interesting. One headline I want to bring you, you may be interested in this one too, Dan. Epic Games, of course, the maker of Fortnite, said to seek new funding at a valuation above $15 billion. So obviously still privately held. Wow. So we'll see whether they're able to get that money. Obviously, video games is another place we're seeing it. Listen, I know that you're focused on Netflix, but I also know you're a very smart guy, Dan. We're also seeing Texas Instruments come out, and even if you haven't had a chance to dig into those, I do think it's worth reminding folks why we care so much about Texas Instruments. I was doing a clumsy job of explaining it before you came on, in terms of the breadth of their portfolio when it comes to analog semiconductors, right? Powering so many electronics, a different business than they were in back in the DSP days when you and I first got to know each other.
Processing.
Exactly. So, but they do give us a window into the broader electronics demand picture, right?
Well, exactly right, Jason. If you think of what they were, they used to make the brains of the mobile phone, right? Which were DSP chips, which are super hot back in the 90s. And like you said, they've now expanded out. They cover such a wide gamut, right? Industrial, automotive. They've got their hands, like you said, in the analog space in so many different areas of manufacturing. So they're actually probably one of the best gauges, other than Taiwan Semiconductor, which is another good gauge, in terms of judging the overall breadth in terms of demand for semiconductors. We're opposed to, let's say, a NVIDIA or an AMD, which is more on, let's say, the cloud side, or Intel on the PC side. So, like you said, it gives us a good way need to try to judge this bigger picture. So that's why TI's report is so critical to getting understanding what's happening in the overall chip space.
So what does it tell us about everything that's going on in the overall chip space? And what does it tell us? I mean, these are going to be the companies to watch, right, Dan, in terms of how we get to the other side or how quickly we get to the other side of the virus?
Well, yeah, I mean, I think what it shows us, Carol, is that, obviously the chip sector, as we talked about before on the show, we took a big hit back in, December of 18. We traded way up. There were very high expectations that we would get a turnaround by, let's say, second quarter. That's now probably pushed out to 2021. So I still think we're kind of going a little bit sideways. Obviously, the COVID-19 thing kind of derails that recovery. So I think at this point in time, we look at the broader pace picture. I still think we have to say that, yeah, we still think the recovery is there in chips, but we think it's probably another, maybe 2 to 3 quarters out, where if we didn't have COVID-19, I think we'd all be looking kind of like in the next couple of quarters that we would start to see this type of improvement. And, unfortunately at this point, we can't judge it, right, guys, because we have this extra force coming against us. So, but, we're still optimistic and hopeful that we're going to get that recovery going into, let's say, the second half of the year or the beginning of next year. And TI is one of the bellwether chip stocks that, we're going to have to continue to follow to make sure that manifests itself.
Stock's up about 2% now in the after hours, so we'll hear what they have to say, the commentary from Rich Templeton and the team. Dan Morgan, you're the best. Thank you so much. I feel like we got a little extra time with you owing to some of the vagaries of our programming, so a real treat to catch up. Dan Morgan, of course, is Vice President and Senior Portfolio Manager, one of our go-to guys, especially when it comes to some of the tech and media names, talking to us about Netflix, and I think helping us understand the anomaly that is this quarter. And I think you've seen the stock react in a similar way, right? In the after hours, where it's like, oh my God, this number's amazing,
and I'm
then
so
it sort of
grateful.
comes down.
I was curious to see what Netflix was going to say. Where they're going to say, "Yeah, this is a great quarter. We're going to hold on to all these people." Like that would have, but they're being like, "Listen, this is really an unusual situation. We get it, and but here's the numbers, and it just reflects what we've been saying so much about everybody at home and what they're doing."
Yeah, absolutely. Tiger King, it's a hit.
I know.
People are watching it.
Guilty pleasure.
All right. Much more to come, including Paul Krugman. Stay tuned to Bloomberg. This is Bloomberg Business Week.
This is a Bloomberg Money Minute. The below-zero plunge in oil prices yesterday shook the stock markets into losses of 2 2/3 to 3.5%. The Dow down 632 points, the Nasdaq 297, the S&P 87. Investors are worried the complete collapse in oil prices is a sign of a deeply depressed rather than just paused economy. Netflix has now released the numbers to show how the coronavirus shutdown has helped business. The streaming service added more than double the number of new subscribers last quarter, nearly 16 million around the world. No fizz in Coca-Cola sales, though. The coronavirus has kept customers from the places that they'd usually buy the soda: convenience stores, theaters, concerts, and sporting events. Chipotle Mexican Grill will pay $25 million as part of a Justice Department agreement to settle charges related to foodborne illness outbreaks against the chain. Joan Doniger, Bloomberg Radio.
Hi, I'm your host, Smokey Cole Bear, filling in for Smokey because after 75 years of...
Only you can prevent wildfires.
Turns out there's much more to say. Nearly 90% of wildfires are caused by us humans being careless, dumping our used barbecue coals willy-nilly. Guess the song was wrong. We did start the fire. That's why I respect Mother Nature and her trees, whether coniferous or new car scented. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Wondering what to play next? Want to know what other TuneIn listeners are listening to right now? Head to the trending section under Browse to explore the most popular stations and podcasts on TuneIn today. Millions of listeners like you can't be wrong.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike. Just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
A social distancing tip.
Putting distance between yourself and others is critical to slowing the spread of coronavirus. So here are ways to stay in contact without the physical contact part. Call, send a text, set up a video conference, post on social media, dedicate a song on the radio. If you have symptoms of fever, dry cough, and shortness of breath, call your healthcare provider before going to their office. For more info, visit coronavirus.gov.
Let's all do our part because we're all #AloneTogether. Brought to you by the Ad Council.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Hey everyone, this is Chris Sproul from the First Draft Podcast. 2020 NFL Draft is on ESPN Radio on TuneIn. Starting Thursday, April 23rd, ESPN Radio has you covered with live coverage, discussions, and analysis of every pick from every round. Be there when the future stars of the NFL find their new home and when your team selects the players that will shape their future for seasons to come. Don't miss the biggest event of the offseason. It's live on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk, radio, and podcasts, along with important breaking news updates.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we are going to get a different sort of read into what's happening in the economy, the consumer economy, through one of the biggest credit card issuers out there. We're talking about Synchrony Financial, Carol.
Huge company, and so very curious to hear our reporting from Jenny Serrain, finance reporter at Bloomberg News. We'll get to her in just a moment. Let's get back, though, to your top business stories. So much news after the closing bell. Charlie Pellet, where shall we start?
Well, I tell you, let me begin right with the numbers, specifically for crude. That is the big story today. We'll get to the equity equity numbers, give you the earning numbers next. Yes, I got a plan here. S&P down 86, a drop there of 3.1%. The Dow down 631, down 2.7%. NASDAQ down 297, a drop there of 3.5%. Crude, as I mentioned, major story. West Texas Intermediate plunging yesterday below zero. Keeping an eye on the June contract now. WTI down 35%, 1322, latest quote that I'm looking at on the Bloomberg Professional Service. Stocks tumbled the most in almost 3 weeks. Treasury bonds rallied as turmoil in the crude oil futures market triggered a fresh bout of risk aversion. The 10-year up 13.30 seconds with a yield of 0.56%. Gold down 0.8%, 16.81 the ounce. Lots of earnings after the bell, as Carol mentioned, keeping an eye on all sorts of moving parts here. Netflix, though, adding nearly twice as many subscribers as predicted in the first quarter, cementing its role as the rare company to benefit from the global health crisis. After an initial pop, we did see shares pull back. Right now, we've got Netflix up by about 2%. Dan Morgan is Senior Portfolio Manager at Synovus Trust, and moments ago right here on Bloomberg Business Week, he told us you got to keep this quarter in perspective.
So I think we've got to take this quarter as an abnormal event. We can't, exploit out in terms of saying they're going to be, 10 million next quarter and this is going to continue. I think you do have to take into account the fact that, like you said, Disney Plus from their November launch has got 50 million subscribers, are going to do potentially 70 million by year end. Those are huge numbers.
Texas Instruments also after the bell, it reported first quarter revenue that beat analyst estimates, helped by customers stocking up on components to avoid potential supply disruptions caused by the COVID-19 pandemic, not just toilet paper. Epic Games, the Fortnite video game maker and owner of the House Party app that has exploded in popularity during the pandemic, has been holding talks to raise a new round of funding, valuing it above its last valuation of $15 billion, this according to sources. Again, recapping, equities lower, lots going on after the bell. We've got you covered. S&P down 86, a drop there of 3.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Jason Kelly on this. It's Tuesday. That's right. It's Tuesday, Lemon.
It's Tuesday, Lemon.
All right. So the bank behind JCPenney, Gap Cards, many others, they were hit by a spending decline. Let's get into this story. It's a must read. Bloomberg News finance reporter Jenny Serrain joining us on the phone from Charlotte, North Carolina. So we're talking about, Jenny.
We're talking about these store credit cards, which, has become super popular in the past few years and are also, a lot of times usually the first to kind of show signs of stress whenever the economy hits a little bit of a road bump. And while it's still early, obviously, this was first quarter results for Synchrony, and that only includes a couple of weeks of impact. The company did say that spending dropped pretty severely in those couple of weeks, and that's continued into the second quarter.
And so remind us of the breadth here, because that's what's so important, in part because they are issuing credit cards. This used to be a part of GE, right? Am I remembering that right?
Yes. Yeah, they actually...
Don't you love how his voice goes up really high?
I go up really high when I'm not so sure what I'm saying.
They spun off from GE just a few years ago, and so they have been a standalone company since then. But yeah, they got their start back in the Great Depression, actually. They got their start financing refrigerators as part of GE, and now so they would argue that they have a lot of experience navigating through cycles and getting through downturns. And but one of the points that CEO Margaret Keane made to me today was the difference between this crisis and the last crisis is that they have a little bit of a better toolbox in the sense, they've been apart from GE and they've been able to really invest in a lot of data analytics and a lot of new technology that kind of allows them to manage their portfolio a lot better this time around, they hope. So it'll be interesting to kind of see how that plays out. But yeah, they're the country's largest provider of these store cards, and so definitely feeling the kind of crush that retail is feeling pretty significantly.
All right, opinion alert. Part of me is like, good, because those stupid store cards charge you so much, and I just feel like they take advantage of consumers. So it's like I'm happy that consumers I'm not happy, but I mean, you know what I mean? They charge a lot on their interest rates. How much of their business is it all store cards completely?
So they have been diversifying in the past few years. They've been investing in some of their programs that are more catered towards helping consumers finance like elective surgery or veterinary bills. So they've been diversifying a bit, but the retail card portfolio is definitely the largest part of their business, and definitely has, as an industry, I think definitely faced some criticism over the years for the interest rates that they charge. The argument I think that folks will make in response to that is, for a lot of consumers with lower credit scores, this is the only way they can get credit and the only way they can really start to build a financial future and things like that. So there's folks on both sides of the argument, and I hear both sides a lot.
Yeah, no, I'm sure you do. We know you do. I mean, and how does this track? I mean, you and the team watch the whole sort of finance and credit card and broader financial services world so closely. Jenny, how does this track with what we've heard? How does it track with what we heard from some of the more bulge bracket banks like JP Morgan, who also have a robust credit card business? What are you hearing, or how does it match up, I guess?
So in some ways it's very similar. Chase and Citi both said last week that they had started to see a drop in spending on their cards as a result of the different, shelter-in-place orders. But the reason that I think Synchrony is a little bit different is they're so heavily tied to retail and
stores.
Really these in-store, exactly, that in-store footprint. And they have large partnerships with e-commerce providers as well, but really heavily tied to that in-store retail experience. And so it is a little bit different, and it's kind of an interesting window into the whole retail scene right now, just given, we haven't seen a lot of earnings out of those guys quite yet. So interesting to hear them talk about spending being down. And interesting also, they said, one positive was that they've seen a real surge in digital. And so, so we'll see if that kind of ends up playing through for a lot of the big retailers that they're partners with. But was definitely one of the bright spots they called out.
And it makes you do wonder that when we do get on the other side of this, if people do, if people are out of work or people are nervous about their jobs, whether or not that spending comes back, and that companies like this continue to feel certainly a lot of pressure.
Yeah, I mean, that's certainly what I worry about is that unemployment picture and how that plays through to people's spending habits and also their ability to pay these credit card bills because consumer debt, it's a real thing. All right, Jenny Serrain, thanks so much, finance reporter for Bloomberg, joining us from North Carolina. Let's head out to San Francisco now. That's where we find Ed Baxter for World National Headlines. Hey there.
All right. Hi, Jason. Pendulum over who has control over opening up the U.S. has swung back to the federal government now, as Attorney General William Barr says the Justice Department will consider taking legal action against governors who continue to impose what he calls stringent closures that infringe on constitutional rights. This with a backdrop of the president saying the states would make those decisions. Speaking of the states, New York Governor Andrew Cuomo has met with the president today. He's had just come out in the past few minutes. He tells MSNBC it went well. Now, going in, he had said he has major differences with the administration in getting supplies, especially testing.
Rather than have 50 states now figure out how to go be like Governor Hogan and figure out how to buy tests in South Korea. That's where the federal government should help. And that's the intelligent distribution of responsibility.
Yeah, now he says he spoke with the president about that today, so we'll await his comments. Meanwhile, he says the state is not ready to open, and when it does, it will be on a regional basis. New Jersey reporting a record number of deaths, 379. California reporting an increase of positive testing, up 7%. Hospitalizations, ICU, and deaths all up. Deaths a particular concern at 5%. Governor Gavin Newsom.
While we've been experiencing some pretty good news as it relates to the total number of people in ICUs, yesterday's number went up slightly, 3.8%.
And the White House and Congress have now agreed on a new pandemic relief plan. The Senate is setting up to vote. Senator Chuck Schumer says it will really help small business. In San Francisco, I'm Ed Baxter, Global News 24 hours a day. This is Bloomberg.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. Well, it was a down day, to say the least, on Wall Street. One of the worst days we've had in the past couple weeks. All the major indices down, the S&P, the NASDAQ, both down more than 3%, accelerating some selling into the close. The Dow down about 2.7%. A lot of earnings after the bell. We'll keep you apprised of that. Carol?
We will indeed. I'm so delighted to have back with us Paul Krugman, Nobel laureate, economist, New York Times columnist, City University of New York distinguished professor of economics, author, editor of nearly 30 books. His latest, Arguing with Zombies, Economics, Politics, and the Fight for a Better Future. Great book to be reading while you're at home at this point. Good to have you back with us, Paul. Welcome back to Bloomberg Radio. So, the president looks like he has hit on another stimulus plan with Congress. And it looks like more money for really small businesses and also money to, help those that have lost their jobs, provide them with some income. I'm curious, as you have watched policies unfold from the government, are they the right ones, and what's needed to kind of maintain the economy as much as they can right now and help us when we get on the other side?
Okay, this program that just got some additional funding, so far it has not worked particularly well. A lot of the money has gone to businesses that don't need it, but that doesn't worry. That's actually in some ways the least bad part of what's happening. The two things that worry me a lot are still we have had no significant relief for state and local governments. Mm-hmm. Remember, those governments have to balance their budgets, and they're on the front lines. And they're even in pure economic terms, they're going to be forced into austerity measures that are going to extend this slump long after the virus has let up. And the other thing is unemployment benefits. We have on paper, we have a really good plan that gets people a lot of compensation, but it's being run through state unemployment offices, which have been totally overwhelmed. So the last number I saw was in Florida, only 1 person in 8 who has been approved for unemployment benefits has actually received any money. So we're falling down enormously on the implementation of the unemployment benefits. So if you take it all together, what we have is, we've had kind of the right ideas in how to deal with this, but we've fallen down enormously. The money is just not flowing on a sufficient scale to deal with the magnitude of this catastrophe.
And Paul, when it comes to execution, it feels like one of the raging debates it seems like we're having, maybe unwittingly or maybe very wittingly, is between the power of the federal government, the responsibility of the federal government, and the responsibility and the role of state and local governments. How did we get here, and where do you think it goes from here in terms of that breakdown?
Well, we have a federal system which does sometimes cause problems. I mean, in Britain, there's no question. There's a government, and there are local authorities, but effectively it's centralized. But we have relied way too much on state and local initiative in situations where they just don't have the resources. So I've been looking on the unemployment front. I've been looking at Canada, which also has a federal system with very strong provinces, but they have an unemployment benefit scheme which is not too different from ours, except the federal government set up a portal and a hotline, and people in Canada are getting their emergency unemployment benefits within days, whereas we are still, immensely backlogged. Why? I think you can understand the political history that got us to this point, but this is a point where we really should have a take-charge federal government in terms of getting that money to the people who need it, and we don't.
I do want to mention some headlines, and I think you might appreciate, Paul, is that New York Governor Andrew Cuomo apparently did a conversation or interview with MSNBC and talked about the conversation he had with President Trump. They talked about testing.